All right. What's up, everybody? I am super pumped to talk to a longtime mentor of mine, good friend. I've interviewed Bill Dallas multiple times, but it is the first time I've done it with the executive director of First Home IQ, Kristen Messerly. What's up, Bill?
Hey, you guys. It's good to meet you too, Kristen. So this will
Yeah,
be fun.
so great to be here with you.
Yeah. So anyone listening to this, Kristen and I are working on, we're a little late, we're a little past halftime of 2023, but we got so much great feedback for our halftime report last year. Like, people are like, hey, are you guys going to do another one this year? And we're like, I guess we're going to do another one. So it's just going to be a little past halftime. It's going to be in the kind of middle of the third quarter. So Bill, for anyone who doesn't know you, like, because there are still a lot of new loan officers coming into the business. Executives all know you. Anybody who's been in the business knows you, but just real quick, give any new loan officers tuning into this a little bit about who you are and what you're doing nowadays.
Oh my gosh. Been doing it for a long time, Dave. So started First Franklin on Franklin Street in Santa Clara while I was going to law school in 1980. Probably the market went from 9 to 18 in the time that I'd started. So 9% to 18. So we reached double digits in interest rates. So I don't know, either I'm the stupidest guy on the planet or I needed a way to cover maybe going to law school. But at the end of the day, been doing it ever since. And so started as a LO, just like most IMBs. There wasn't much of a mortgage broker community, if any, at the time. And so really have spent my life in mortgage and over that period of time have been able to do a lot of great things, meet a lot of great people, and build some really cool companies in the space. Learned how to finance them. One of the hardest things, I think, for mortgage bankers, because they're independent, is they are sort of loaners. We're sort of collegial, very collegial industry, which I love about it. But at the end of the day, you're sort of left on an island with you and the other, it feels like Gilligan's Island. I'll use an old one, right? Where the skipper and all these guys are stuck there forever. You sort of feel that way when you own a mortgage business, right? It's friendly, but it's highly competitive. And the market is almost insanely difficult, right? It just beats the living snot out of most people in the mortgage business. And so today, I left, took Finance of America public in 2021, FOA, still public. And in March of 2022, when Patty Cook decided she had some health concerns, we decided that we left the business together at that time. And then I've been back to Dallas Capital. When I first sold First Franklin in 94, the first time I created Dallas Capital as a family office and a consulting firm. So today I have about 8 customers that I assist, all IMBs. And they're all over the place. Some are private equity owned, some are independent owned, small, medium, large, right? People that I actually think, and this will maybe with Kristen, I'm trying to find people who want to make a difference and make an impact and have the chutzpah inside their organization to do that. And they need guidance, right? And people have not seen anything like this. And I told Casey Crawford, I've always said to him, that I've seen everything. And then I have to now amend that and said, now I've seen everything, because I don't think any of us expected anything quite like what you'd seen in a global pandemic, followed by, the almost precipitous drop in interest rates that really, I think, fostered another sort of super bloom of real estate prices that had already gone up. It reminds me of a lot of 2001 when we actually had September 11th, which did the same thing, right? Where it extended home prices going up and that's exacerbated some of the problems that you guys see right today. And I think today, not that we're any different, but affordable housing, you've got some major issues, like we were saying, when you'd ask me a little bit about mortgage and about my own quest, being an executive and owning the business and having my own capital and pushing that capital out every morning like it's a bet, and then pulling that capital down every night and pushing it back out every day is exhausting to mortgage people, right? And we have been on a record climb for and difficulty for probably the last decade or so, right? So I think I can add a lot of value to helping people do that, and I enjoy it. But today, I'm pretty much helping other IMBs try to figure it out.
Love it. I'm going to put a little more color around it that I'm going to ask the first question. Kristen, I'll ask this first question, then you and I will just go back and forth with Bill until we run out of time. But just put a little more color on Bill Dallas. I started the business in '86, and I had the honor of being a customer of First Franklin. And at one point, you know, Bill, and you know this because you've been a mentor ever since this, but I got invited to a customer advisory weekend or 2 or 3 day event where a lot of it was out of his house. And first of all, Bill is one of the most accomplished, you know, entrepreneurs in mortgage. So he had a quite nice house, and I was kind of an up and comer in the mortgage space. And I was like, I want a house like this someday. You know, I want to achieve this kind of success. And then, but really the most valuable thing I always got from you is you were in the trenches. You know, like, I really don't know that I would have created a YouTube channel and I'd be as close to the street if you didn't inspire me with how close you were to the street. You know, you were bringing in your best customers. You personally moderated from breakfast to dinner to golf, 2 to 3 days of, I want to learn from you. And that, you know, that was where I really, you know, got like, you know what, when I started being an entrepreneur and I built MortgageCoach, and I built Mortgage Company, I'm like, no one's going to be closer to the street than me, you know? And that's why I interview so many people. And so first of all, thank you for that, Bill. You know, I think you gave me a character trait that has served me well in my career. And then also, for anyone that uses MortgageCoach, like, Bill is a guy that mentored me and helped me as we started it. So thank you for that. So Bill, let's get with it. I mean, you're a guy that is always, you are always, I know, I didn't know.
I love that.
Yeah.
I love we're sweeping up. Now I do feel like Gilligan's Island. I love this. Yeah, this is awesome.
Yeah, you are a guy that is always looking for opportunity in chaos. And let's face it, it is chaos in the mortgage space. What are some of the opportunities in your mind? And then Kristen, let's just go back and forth together here.
Well, it's funny because I think there's right now, there's very little margin. First, there's very little margin for error. Second, people are spending precious cash and capital trying to just to survive and remodel their home, right? So everybody's trying to remodel their business, and it's an aging business model. And it's and like Kristen, like you would know, I mean, it's run by aging people, right? It's almost like a senior citizens platform today, right? Everybody's over 55. And so I think what we've seen is now, like Dave said, I always use C equals DFR as my calling card. And whether it's crisis, change, creativity, all these things happen when dissatisfaction, fear, and resistance to change, the DFR, are so broken down that you say, okay, we got to do something. And we are there. And so what I find is in volume has done this, right? It's a Richter scale like volume decline. And so for every percent that it's gone up, thousands of applications are lost. And because there's no inventory in the world right now, what's happening? What is going to happen? And so what I do is I spend most of my time trying to help mortgage people survive, save their precious cash, and be able to at the same time remodel the home. I mean, it's almost like you're living in your house and you have to remodel it. It's a terrible process if you've ever done that, right? Like even with Dave, you got contractors running around and people coming back. And so I think helping owners through that is really imperative, and building leadership and management teams. Everything's about training. The whole world is about training and development of talent. Like Dave, like you would know, I could never have done any of the things that we could have accomplished if I didn't have some of the best teammates and people in the business. And they're all people that they were young and very neophyte-ish, just like me when we started in the business. And so I was smart enough to know early on that I should bring in a consultant, which I did, to fix me. I was the problem. And so what my consultant, who has passed away now, what he told me early on, and we worked tirelessly around this, was how do you avoid the founder's trap? And I think what most mortgage companies are experiencing today is the founder's trap. And that is, you've sort of gone about as far, you've exhausted your own expertise. You've gone as far as you can go. You've made a lot of money, you have some assets, you have some things, now what? And I think he helped me define what I wanted to do, how to do it, and then how do I bring my whole organization along with me? And oh, by the way, you know, when you, like Kristen, I would say this, when you have success, the opposite side of success is emptiness or significance. You have two choices, right? And you can't, and you have to go back out for the second. Like you said, it's a halftime report, right? So Bob Buford wrote a whole bunch of books about halftime. And halftime was the first half of your life is success. The second half will be a complete failure if you don't figure out that you have to get dressed up, get back in the field, and go back out and create significance. And the whole thing is about impact, significance, making a difference, investing in people, investing in time, and helping people get along. And if you can do that, life is good. It's always good, right? And I think that's what I try to inspire these businesses to do in a time that it's just horrendous, right? So how do you manage that, right? And that is the key, is I think developing a gate, a communication gate, a structure, and a way to think about how we are going to attack these things. Because it isn't so much about some great, what I was going to think about, if you were trying to say, how do I survive this, right? You could be digital. You could go into specialized niches like products. You could try sustainable mortgages. You could have affordable housing initiatives. You could do lead gen. You could do refinancing and try equity sharing. You could bring in a consultant. You could try to do other things in cap markets. You know, you could, no person left behind. You could go into deep marketing. You could try partnerships and real estate professionals and remote closings and all this bullshit that you want to try to do. Or you could basically get your team together and say, okay, this second half, we had a pretty good first half. We're getting our ass beat right now. Now what? And we've got to sign back up as organizations, and that's not easy for them to do.
Yeah. So Kristen, I want to just real quick, Kristen, before you ask your next question, I do want to call out a few things, because, there's a lot of executives watching this. Whenever I interview Bill Dallas, a lot of CEOs, heads of production, every time I see Casey Crawford, he's like, that interview you did with Bill Dallas, 20 years ago, like I listened to it 5 times. But how do you avoid the founder trap? I want every loan officer to hear that as well, because what got us here isn't going to get us through this next decade. Like it's why I've dedicated this whole month to what I call the Mortgage Coach 10X strategy, and why every time I speak in the market, I'm calling it the advice revolution, is that we need to become advisors, and right now, while there are a lot of loan officers that are true mortgage advisors, and I know them all because they use Mortgage Coach and they've done 1,000 TCAs, like every leader, you need to have a sales force of digitally driven mortgage advisors. And so the C-suite needs to change, the loan officers need to change. And I just want to make sure you connected that. And then I also hope everybody wrote down impact and making a difference. Like Bill talked about that, but I want you to add a few more words beyond the transaction. Like the future of lending is, what can we do beyond the transaction? Because you know what? AI could do a transaction. Automation could do a transaction. Credit unions could do a transaction. Online lenders could do a transaction. It's creating impact and making a difference beyond the transaction that will, make our future. Bill, you agree with all of that?
I do. I think it's financial. It's a little bit like, Kristen, if we were talking to a Gen X, Gen Z, or a millennial, and you were talking about financial fitness, right? There are certain haves that you have to have in order to build a sustainable financial life. And part of that is income, and part of that is building assets. And how do you do that? And so I think, and you can't be like my science, I'm not a science guy, so shoot me if this falls flat, but I'm not a planarian, right? I can't keep cutting myself in half, right? And so what happens, I think, with most people is that they don't understand wealth building. And wealth building is really the relationship, no borrower left behind, and it starts with a transaction. The problem with mortgage is they talk a lot about this shit and they don't do any of it. They really don't. They're so transactional oriented that they lose sight of, how do I stay connected? And because because our business model pretty much requires that we sell servicing in order to maintain any profit, we just sort of toss the customer relationship. And I go back to when I start with mortgage companies today, I basically say, you are building a company of liabilities, and you need to build a company of assets. And the liabilities can't be leases, loan officers, and liabilities, right? You just can't. The mortgage business, nobody wants to own one of these things, right? So how do you build assets? The only two assets you have is really the servicing asset, which is also connected to the customer data and that asset. So how do you do that? And it starts by, I even think our terminology is wacky. We close the loan. Why don't we open a relationship, right? And I don't even know why we talk about it. It's like the terminal at the airport. That'd be like, who wants to go there to die? So I think how you approach retaining the customer relationship and the customer's data is everything going forward. And so I posit to people, and you see there's financial fitness apps and there's all kinds of things developing. I mean, I've seen Simple Nexus tries a few things, Blend tries a few things. Now you've got FinLocker and a couple others. And then there's individual people trying to create these apps. We did it at Blackstone and at Finance of America. And it isn't so much about the app. I have to have, in my view, what's wrong is a little bit what's wrong in real estate today. You have 6% commission and 3% going to buyer seller. And what's happening is that the 3% that goes to the buyer is paid for by the seller, and all the information comes by the seller. So the buyer suddenly feels really untethered to the transaction, and probably not even represented. So I think and so you see that coming down, 5, 4, 3, 2, 0. And so I think what's happening in mortgage is a little bit the same. We sell this transaction and there's no way to compensate anybody, given Dodd-Frank, for retaining the customer relationship. People do what they're compensated to do. So my posit to everybody is, why don't we just contractually have an agreement? So I sign you up. I take an application from you and I sign you up, and I sign you for life. You can cancel at any time. But at least I'm creating an agreement. And, we go into marketing. What do they teach you to? You got to be compliant. So you've got to make sure everybody opts in just so I can call you. Okay, why don't I just start that way? Why don't you opt in to using me forever? Right? And let me be your trusted engine. Oh God, I love it when I can add those things in there, and you'll never be left behind.
I love what you're saying here.
And I think a lot of it is rethinking and I'm going to say it, which is what I tell these business owners. Your business model is telling you that it's FUBAR, right? It's over. And so why aren't you changing? You want to go hire more branches and bring in more people it's not working. The cost to produce a loan is at gargantuan levels. And the pull through and retention is worse. You can't have a worse business model. And then volume falls off because rates go up and you're stuck, holding this, all these costs. So my view is that if you're going to remodel your aging business model, you better have a pro, better work with pros, and you better think it through, because you only have time and money, and you only have a few dollars in order to invest into what you're trying to do. So you've got to think this through. So what I try to do is help IMBs understand, if you want to build a valuable business coming out of this, it isn't about size and scale. It's about retention of the customer relationship and retention of assets. Because if you don't do that, you're just building more and more liabilities, and nobody wants those things. Nobody wants 500 branches and 2,000 loan officers. Sounds to me like a bad daycare or a hair salon, or it's worse, right? So how do you do that and build? Because I would rather say, I have 50,000 customers in a locker. I have $80 billion in loan servicing, right? Those things are assets that people want. And so I think, and our legislation in our business has hurt us. It's added costs to the process. It may or may not have protected the consumer. I don't know. The time will tell. But at the end of the day, the cost is exorbitant, and you can't compensate people to do anything past a transaction. So how do you do that, right? And if I want to sell different products, I got to charge the same price. My loan officer gets the same comp. So one of the ways that I do it is in TPO. If you're in third party, they don't have to be licensed. They can sell multiple products, right? So you can balance it, but you got to really think these things through, I guess.
It's incredible. You're hitting on a lot of the questions we were planning to ask you. I could just let you, keep talking about your biggest priorities. And I think that it's also notable that you've started with inner transformation, talking about the power of, your inner growth, and then moving into the borrower relationship. One of the things that both Dave and I have talked a lot about is this growing distrust in the market and distrust in experts. But I want to, and I think there's a lot more we could dig in on that. But knowing your expertise, I would like to go a little bit more macro and ask you, knowing that affordable housing and supply is a huge issue to, to first-time home buyers and to just production in the market. I would love to know what you think is one of the biggest challenges in creating more affordable supply, and any solutions that you have or thoughts you have on that.
Yeah, it's great. It's my life has been spent trying to figure this out, right? So the things that we've learned is you've got with sustainable mortgages and with the with the challenges we have with water and the challenges we have with heat, and now with the challenges that we're going to have with fire and the challenges with just insurance in general, we've created a big issue, right? It's finally an issue that everybody's going to deal with, because it's starting to hit home now, especially in areas like California that have already suffered from, an insurance exodus, and you're beginning to see that. So you start looking then at affordable. So, and I've spent my life trying to partner with government agencies and nonprofit organizations that support this. In fact, I've managed today the largest Black and brown lender in America, probably independent with Panorama. So we focus on, and there's a bunch of things you can offer: mortgage products, you can offer down payment assistance, you can offer lower rates, you can reduce fees to help them buy it and achieve it. Basically, underwriting guidelines have to change. And then if you want to build affordable, you have to take risk on the property type. So 80 examples, ADUs. California, it's been like a nightmare for me to get an ADU. I've invested in businesses with auxiliary dwelling units. The easiest way to solve affordable is to allow other people to take structures that are in existence and just remodel them and give them a credit. You don't have zoning issues, you don't have all that shit, right, that you've got to go through in order to make it happen. The second thing you've got to do in building is you've got to build manufactured and modular. You have to, right? Because those are the only things that are cheap in terms of, because if you want to go out and buy sticks and buy materials, it's too expensive to build. It's too expensive to go through the entitlement process in order to make that happen, right? So I think the early returns are working. So what I tried to do with the agencies was work with partners who are finding places with water and helping them use manufactured and other types of structures that are less expensive so people can actually buy them, right? Because if you don't, you probably got a two-pronged sword, right? They don't really understand the process. So part of it's training and early training. And the second part is crickets. There's no affordable units. And then the most affordable unit we have is in freaking Trauma, which is a condo or a townhome, right? Because if you want to live in a condo or a townhome, suddenly, because of all the things that we just talked about, how much is the actual condo association fee or homeowner? I mean, it's like a fortune, because they've blown up in Florida, they blow away in other markets. It's wrought with fraud inside the system. So I think if you're going to truly attack affordable, you have to work. I think working within the NBA has chosen, I think, Memphis, Columbus, and maybe one or two other cities. And they're trying to take all the nonprofits, anybody that has anything to do with down payment assist, and organize them in a way that people understand it, right? And I think all of that has to be something that as a company that because really in the companies that I see today, it's probably the only thing that's working, right? I think people still buying cash transactions. Well, that creates no loans for anybody or any. And so when you're looking on the other side, I'd say about 50% of the volume I see in the Midwest is that volume is an FHA loan followed by a DPA behind it.
Yeah.
Right? A down payment assist, right?
So I want to pause you right there because, one of the things Kristen and I have really got our hands around with First Home IQ is that there's more down payment assistance programs, than ever available. And
But they're teeny. They
yeah,
run out, right? You have to be a master of almost some complication that there's so many of them that
well,
they run out. It's hard to build a sustainable pipeline of that because you have to be a master of certificates and all these assistant programs.
yeah, no doubt. But there are more resources and there's also better tech. I mean, the total cost analysis helps present that in a way that, turns something pretty complex into something pretty simple. But here's my question. You know, we're really committed to, inspiring and educating. First Home IQ is inspiring and educating, and Trust Engine is, hey, how can we leverage data to educate, get the right educational message to help consumers optimize around financial freedom. So, and I do think the industry needs to learn how to inspire and educate the next generation. I mean, it is just a wave of next gen buyers coming in, and because I don't think we do a great job of inspiring, educating, they're just getting older when they buy, and they're waiting longer. And I do believe, well, yes, there's challenges. If someone wants to buy, there's more resources than ever. And then the next generation, families that do own homes, have more equity and they have more resources to help their kids get into it. So any advice you have to Kristen and I, or any advice you have to the industry on how we can better inspire and connect with the next generation? And by the way, guys, when we ask him this, he also is the largest donor to a high school. So not only do you have a lot of next gen kids, you also are very involved in a high school. So how would you answer this?
Yeah, I mean, I've spent my life actually trying to answer it, right? I think starting early with with adding it to educational resources as a component part of understanding how to manage your life going forward. Money matters, right? And how you save money matters. How you spend money matters. What you do with your money matters. And so you have, and I've always tried to explain it like I explain it to investors who buy mortgages from us. I said there's two borrowers. There's the MNA, the mass non-affluent, then there's the affluent. The difference, under $100,000 in income, under $100,000 in assets to the left, and over that on the right. So if you want to be a person that accumulates assets, then you have to save money and income, and you have to create enough income in order to do that. And so every dollar is precious. So, and how do you keep dollars versus paying taxes versus doing this? All of those things matter. So what we try to do at Oaks Christian is make first trying to help them understand that this is really the eighth wonder of the world. There's very few assets that you can purchase with leverage and get the full Monty of the deductions and the appreciation based upon somebody else giving you the money. I always called that the opium, the wonder drug in mortgage, other people's money, right? So if you can use somebody else's money because you don't have any, you just have income, now you're starting to move yourself into how do you handle that? That has to start early. And so at Oaks, we have classes in junior high that starts talking about how to make this transition. And then when you get into high school, there's two tracks that you go down to, that we give everybody. Part of it's credit, managing money, getting ready for a roommate, going to college. How do you use college dollars? What do you have to do to finance it? All of that. But you're going to start getting into this roommate thing. And if you think about it, you're paying somebody else at that point who owns real estate to live in their house. That's another nugget. So we just teach them at a very early age. And, you know, you can do workshops, webinars. One of the things, Kristen, that we do, which is really cool, is we basically take them down to the inner city and show them, you know, displaced people. And it happens to everybody, right? It doesn't matter. All socioeconomic classes get, you know, you can end up down there or homeless just by, you know, not getting things in order. And so when we start this process, we say there is an order of things. You stay in school as long as you can. The longer you stay, the more money you make. Then at that point, you're going to get a job. Now you start earning money. Then at that point, you probably are going to get married. And then at that point, you're probably going to have children, potentially, right? If you get that out of order, you are hosed. And the people that don't have wealth get this out of order, or it's married, divorced, kids, married, divorced, kids, and we become that planarian that I talked about. So we try to help them understand the diagram of when you need to make important financial decisions, you need to pause and think about it and spend time. And you know what Dave spent his life doing is talking about how important a trusted advisor is to that process. That's what loan officers should become. And they tinkle around it a bit, but they never quite dive into it.
Well,
actually
some do.
Becoming
some
that
do.
supportive.
Not enough.
Some do.
It's not at scale. And every manager listening to this right now, if you go to mortgagecoach.com/10x, I am doing, you know, training on how to go from loan officer to mortgage advisor in this market. And one of the trainings is how to reduce rate shopping. You know, like, to the most profitable loan officers that have the least amount of price exceptions are the ones that give the most financial literacy and value to the consumer. Like
none of my clients ever asked me about rate. They always knew somebody had a better rate. I mean, I always said, if you're rate shopping, you're already not my customer, because you don't even understand what you're asking. Right? Yeah. Most people look at rates. Well, what about fees, points, all these other charges that people, because we've been upselling interest rates to create 0 points and 0 fees for so long that people actually think that's a strategy.
Yeah, no, it's not. So, Kristen, I know we're going to run out of time, so I'm going to give you the last question. I do want to put you on the spot here, Bill. I think it would be really fun as a part of, you know, First Home IQ. We're going to have different leaders. Some of them are Gen Z leaders. Some of those are people that have done life right. And I think it would be fun for you to do a money matters lesson and make that part of the First Home IQ curriculum. You think you'd be game for
I love it. Yeah, I mean,
content for us?
I live it with my 5 little whack job children that I've had to manage through this process, plus all the kids and everybody that we have, the kids. And sometimes it's not even just the kids. Sometimes it's the parents that you have to reorder, right? They don't value this or value that. So because they didn't have it or they didn't understand it. So blah, right. And I think part of it is sort of a total reset in your mind about, and it has to be important to you. I mean, it doesn't just happen that you end up with a few $1 million so you can retire, right? The Wall Street Journal had an article. What does it take? How many millions does it just came out? It was just yesterday. I was reading it and looking at the people that were in there, and they say, what does $5 million in retirement really give you? Okay, well, how do you get there? And then I think there are loan products like equity share, like reverse mortgages and different things that most mortgage people don't really understand. And for some people, that's a better product than trying to get a low rate mortgage with a payment all the time. So sorry,
Yeah,
I can go
no,
off forever.
no, it's okay. We'll just be thinking when you do the Money Matters class, I think you'd want to be speaking to both the kids and the parents. So we'd scale Uncle Bill and help you
No, that's good. I like it.
influence millions of next gen with that wisdom. So be thinking about it. So Kristen, I think this might be the last question we get in. What do you got for Bill?
Well, you've talked a lot about how the market's changed, and I think the consumer doesn't trust the market. Like we talked about, there's a lot of a lack of affordability and supply and all of that, and I think there's a lot of fear there. And then they go to talk to an expert if they even get to that point, and they don't trust the expert. Do you have suggestions especially with the how quickly technology is changing and AI and all of that? The customer wants to be empowered to gather information on their own, but you also want to be building a long-term relationship with that customer beyond the transaction. So do you have like any practical suggestions for, right now and into the next year for loan officers to be able to build that trust with the customer?
Yeah, I think you start by asking for a relationship that's longer than the transaction. So the first thing I would do is create an agreement that basically, and I would start with asking for a relationship. We start by generally responding to a question where somebody says, I need to buy a house, I want to do this, or these are the rates I have and all that. And I would just say, that's the wrong question. The question is, you need an expert, you need somebody that you trust. Do you trust me? Can I be that person for you? And let me demonstrate that by helping you do this or that, right, as you start. Because I think we sort of need to reverse the ask, because, and the challenge with that is everything in mortgage is paid for by the transaction. So how do you build enough value in that? And that is the way I would do that, is tell you that if you don't create customers as assets, and you can't retain that asset, and you can't prove that you've retained that asset, you're not building any value in your mortgage business. So what really are you doing? Right. And I think if you're trying to make an impact and you're trying to help people do that, it's the proper way to start. So I spent the last couple of years, really 3 or 4 years, building an agreement, what I'm going to call a home. It's a real estate. It's not an advisor agreement. It's a home services agreement that I ask the loan officers that I work with, ask their customer to sign. And I represent you. And do you download my app or do you do this? That depends, right? Depends on what you want to do. But at the end of the day, I want to be there for you through it all. And there is look, if you talk to almost any wealthy person, real estate's a component of it, and so is money. The third thing that's a component part are trusted advisors. There isn't a person. When I managed Mary Kate and Ashley and the Olsen twins, and I almost had to throw people out of the boat in order to find the right people to help them, right? And they had to be trusted. And so whether that's a CPA, a lawyer, and giving them, and one of the cool things that I learned about it, and I think that's where you were going, I have to put you in control. So with Mary Kate and Ashley, it was a little bit like, this is your life. You got to take control of it. And I'll help you. You can trust me. I'm not going to make these decisions. I'm going to posit the options for you, give you many opportunities, and bring people that you can trust. And oh, by the way, I'm going to build a fence around you, so all the distrust and everything else that exists in the planet, I can keep out. Because if I do that out, I probably win.
Sorry, go ahead.
We probably win, right? And
I like that you're framing it, I think, in that way.
You need to be more in control. The borrower needs to be in total control of this decision. And they need to rely on my expertise in order to help them. And that should be contractual. So there is a contractual relationship, not a bunch of bullshit that I'm talking about, right? Because if I am Mary Kate and Ashley, think about this. I have just what I said. If I'm just helping them, that's one thing, right? But what if I'm their trustee for all their assets? That's another, right? Yeah, because now I've got a bunch of responsibilities and legal responsibilities that I've just taken it up a notch. I want you to take it up a notch if I'm a loan officer, because right now you're painfully at the bottom, right? Nobody believes you, right? So how are you going to build that? And that's one of the reasons why I went to law school, was that I wanted to understand the issues around this relationship. And I think if you think about real estate, where we started a little bit, real estate has got some issues around that it's dealing with today, because the seller pays the commission and all fiduciary duty is owed to the seller. Well, if I'm a buyer, I don't understand that. I actually think that realtor's helping me. Well, no, they're not. They're trying to get a deal done for the seller, because that's who pays the commission. So I think it's wrought with issues, and you're going to see more and more buyer agreements coming out of this. And I think that's going to be easier, Dave, for mortgage people. Because finally, because one of the things that's come out of this is, I think it's just disloyalty has occurred because of the vest pocket nature of no listings and no inventory. So if I had a house that's coming on the market, I want to sell it to one of my buyers, not to let somebody else get access. Well, it's just exacerbated this problem throughout the United States. So we've got to figure out ways that I could create products so that people take out their equity, and then we've got to create listings and inventory. Or, Kristen, we can't do affordable housing if I don't have affordable resale. And I lived in California my whole life. The definition of affordable housing in California is unaffordable.
Mhm.
Yeah. Right.
So how do I help people get into that stream? That stream is going fast. And so you have to really pick your spots and understand what you're doing. And I do think work from home is helping, because you can just move the hell out of wherever you want, right? If you can find a remote job to some extent. Whereas before, you didn't have that you didn't have that answer. That was not in anybody's vocabulary prior to COVID. But yeah, I mean, to me, what you're doing, providing educational resources and what I'm doing, providing some consulting help to help people go through the process, should be built into the fabric of educational institutions, the MBA, and different things where you can make a difference. But I like my tagline. It's one person, one investment, one community, one thing at a time. Right?
Yep.
I can't boil the ocean. I can't get everybody to do it, but I can make a difference. And so every day we wake up and we try to make a difference in somebody's life. We either employ a child, we put them to work, we do something, we try to find a community, we give somebody food, we do something. Why? Because that's what we're supposed to do as humans. And I think that a sense of community, what I love about mortgage bankers is that they own these communities. They just don't quite bring it all together like they should. So I try to help them do that.
Well, we're all on the way to doing it. I mean, Trust Engine, you guys are watching this, it's in the Trust Engine YouTube channel. Make sure you connect and like it. I'm also going to put this in the Mortgage Coach YouTube channel, because I think there's a tremendous amount of both executive value and loan officer value. Kristen, what you're doing with First Home IQ, I think the lending industry can really make a dent in financial literacy in America if we all work together. Bill, this has been an incredible conversation. If anyone, what's the best place for people to follow you? I noticed you have updated your website, dallascapital.com.
Yeah.
And what's
Yeah. I mean,
the best way for people to connect?
biggest is probably LinkedIn. LinkedIn for me is probably the easiest, where I find more people following me on LinkedIn than I try to do on, like, my son's he runs for NRG, he's a TikToker, and so he does a bunch of, they all want me to do a podcast and do a bunch of different things, and I just said, look, I'll just help Dave and Kristen. How's that?
Yeah, I love that. We got a podcast here. You should do a podcast, but we would love to have you create some content and hopefully introduce Kristen to the right folks over at your high school.
Kristen, I am all yours, girlfriend. I mean, I think with Casey, when you get Casey on, right, impact lending is big.
Yeah.
Right. I think what Paul's doing with Axis is big. I think there are some people who are really committed to it, some people who talk a lot about it, but I think the other piece is trying to attract talent to the industry. I mean, you have to do it,
Yeah.
right? So, like, I gave a gift on the East Coast with Peter Paul, who used to be in mortgage, and he has the Paul School at New Hampshire, and we gave money to bring people into the mortgage space and have them understand. You just you have to somehow be involved in it and try to be focused on it, and it is good for you. It's good for your brand, right? It's good to make that impact. And I think people, I mean, to Casey's point, people may start choosing businesses and products based upon the impact that it makes, or the social, or I agree with its social policy. Right?
They absolutely are. Yeah. Gen Z in particular, it started millennials. We were talking about that a little bit, but Gen Z is like really in that space. And I think that it does improve your brand to be involved, but it's been exciting there are lenders and loan officers who are really excited about delivering education in their communities and having that impact. And those are the people that we want to help empower and support them. So
yeah,
thanks for your help on that.
Well, Bill,
and continuous learning, like what you guys do. I think the lending landscape is very dynamic, and you've got to commit to professional development, continuing to learn and continuing to change, and stay ahead of trends and technological things and regulatory changes. But at the end of the day, I think you want to really try to make sure that you can cement a relationship with your customer, right, that is good for them.
Well, Bill, it's been way too long since I've had you on the channel. Let's do this more often. I would love to get your take. Like, I was just scanning your LinkedIn, and I mean, guys, it's valuable. If you're an executive and you're not following Bill Dallas, make sure you follow him on LinkedIn. If you're a mortgage professional, the guy is always looking for where the puck is going. And the thing I love most is he's looking where the puck is going, and he really cares about making an impact in the local communities that he serves. And he's demonstrated that over the course of 3 decades, just constantly, like, how can I make local communities better? And appreciate you, my brother. And look forward to our next conversation.
Thank you.
All
Old
right.
people know stuff.
Some of them do. All right. Take care, bro.